Hey, wagwan everyone. We are going to begin when we hit 100 likes today. No less, no more. One, two. 40 likes and we will begin.
is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future. It's something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground. With a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Hey, good afternoon. One, two, 1, 2. Can you hear me? Yeah. Yeah.
Hello, Thomas.
Oh, someone is being sleepy. Did you just wake up, Bilal?
No, I was already here in the morning.
Oh, sorry, that was someone else. Someone had a really sleepy voice. Good afternoon, everyone. How are you today? How was your day? How was your morning?
Well, very good.
You made some profit.
Yes.
I had 2 loss this morning.
Good.
10%. Thank you very much.
Good. Yeah, morning briefing was brief, but to the point. To the point that we made some profit. I think this morning we had this drop, 92 pips, and second one, 120. And then I closed down all my positions because I had some feelings that it's going to bounce back. And I even mentioned it in Discord that bumpy road ahead. I should play the lottery. Shouldn't I?
Well, definitely.
Oh, it's Andrew, the sleepy voice. Wakey.
Is my voice sleepy?
Yeah, it sounded like really slow and, sleepy. Morning, sunshine.
I've been awake. You know when you first gave the sell signal?
Yeah.
Around UK time, it was maybe around like 6 a.m.
Yes. Yeah. I
was awake at that time.
Hold on, that was... Where's my Discord?
Yeah. You sent the signal. I think you even sent it at 5 a.m. I think.
No, that was too late. Yeah, that's my Discord. Let's see. Let's find the clues. So the first analysis was... God, today I was on fire.
Yeah, you sent it.
Oh no, shit. Yeah, that was 6:20. Yeah, you're right. Yeah. That was a 5:20 UK time.
Yeah. When you sent that, I was like, oh, okay, good.
And then
when you 6 a.m., we already in nice profits.
18 minutes later, I sent out the sell. The wedge appeared on the chart, and then I sent out a screenshot of my MetaTrader that I entered into a sell position. Fast forward 20-30 minutes in, 20 pips profit, then entered into another position, and then later, 120 pips, 200 pips later, that was the result. And here we are in the afternoon stream. So that was a particularly good morning, considering that I wasn't expecting this today. To have this much profit already, because if you look at the economic calendar where you should always start your trading, you can see that there's not much happening today, especially in the afternoon session. And currently Miss Lagarde is about to give a speech. This is going to move the market, so I would rather not trade. I wonder if we have any opportunity to tune in.
When you looking for the buy?
When I looking for a buy or sell?
Yeah, you were looking for the buy. I'm looking at the chart that you sent in the morning.
Yeah.
The fib level was 1845.
Yeah,
And I think
yeah.
you wanted to catch a buy from those levels.
Yeah, if you have a look on the higher time frame, you can see that I extended the top of that wedge, which was broken. If you just go to the daily time frame, yeah, it's a bit messy, but you see that this is the top wedge, which I was expecting, you know, to come down. That lines up with the fib 7860 and many other confirmations, and I'm still looking at that level because historically, if you look what happened before the rate hikes, if I just go back quickly to higher time frame, I showed you quite a few times that tomorrow is going to be another rate hike by the Fed, and you can see that prior to the previous rate hikes, whether we talk about last month or 2015, because those were the last one and the previous rate hikes, you can see that gold was going down prior to the rate hike. So when the Fed was just talking the talk but not walking, price was dropping. As soon as they increased interest rate by 25 basis points, which is not a huge increase, you can see that gold started going up. And you know, I think it's going to happen as well. Again, the price is going to drop before the rate hike, which is you know, little more than 24 hours away. So I think today, as most of the traders and investors are waiting for tomorrow's rate hike at 7 p.m., I think we're going to have a really, really volatile day. One of the reasons is the rate hike tomorrow. The second one is Europe just announced that yes, there is a possibility of oil embargo from Russia, which is going to have devastating effect on every single market. Remember, the last embargo was in 1970, and we talked about what were the similarities to 1970 and today. 1970s, Kim Il-pung war or some other war, oil embargo, high inflation, tight labor market. So everything pretty much lines up to current days. But there was no pandemic back then. There was no supply chain issue back then. There was no chip shortage back then. There was no Ukrainian war back then. So we are in a deeper shit than in the 1970s, in my opinion. And markets are going to just crash if the oil embargo is coming. So today I'm still expecting a drop back to 1870, 1845 level. But this impulse move, which just happened now, you know, is telling me that maybe it's time to stop now. We made some good profit in the morning, haven't we?
Yes, we did.
Good. There was Chintan, was it you? You made
Yes,
some good
that's
profit?
right. Very nice
Good.
profits. Thank you, Thomas.
Well done, well done. Okay, so yeah, I'm gonna be cautious today. In the morning we made the money already. You know, gold luckily paid for my electrician work in the new house, so that's good. Would I sell it at this level? Who's selling and who's buying? Show hands.
I'm thinking of selling from 1866.45.
1860, right? The current price level.
Yes.
You know, I definitely see downside potential, and I think Christine Lagarde today could definitely hit the market. She has the power, the authority, and the experience to move markets. Where are you, Christine? There you go, Christine. Christine, Miss Lagarde. No, actually, it's in 5 minutes, so we still have time. So she could, but you know, this impulse move right here that is happening right now, it just scared the shit out of me. I would not start selling right now because it's gonna go higher. Yeah. Right, it's too late. Hey, morning, Marwan. Good afternoon. For me, it's too late to enter into buy or sell. But I'm curious to hear. Are you guys buy or sell?
Yeah, I bought 1856.
Thanks for telling me earlier that Thomas, you should buy.
I don't dare anymore.
Yeah. That's the beauty of fly trading. Right, we need to deliver some results because I know you guys made some money, which is good, but we have some people on the stream who most likely missed the early sell and the buy. I still think that price is going to come back down to the fib 786 level at 1845, but the question is from where? I need to see, and I'm telling you what's going to happen. So this is the playbook for the afternoon, so pay attention. We know it's hard to put a fib, but the current price level is looking good for sell. If I were to sell from the current price level, I would put the stop loss at 1867. But this has a high probability that it's going to hit stop loss. So be advised, this is not financial advice. And make sure that you manage risk. Now, volatility is definitely here. Christine Lagarde is about to give a speech. An extra confirmation what I would wait for is going down to lower time frame and you know, market structure breaks. So I would want to see ideally this market structure to break. So price to come down to 1857, then a retest, then boom down again. That would be an extra confirmation for me. Based on the experience and the analysis that we had on how gold reacts to previous rate hikes, and prior to the rate hike, that is always falling, and that's why volatility is picking up. And based on or speculating on previous price action for many years down the line, you know, I'm still, you know, would be confident to sell. And you know what, I'm going to place a small sell just for the stream, but this is a really risky setup. So this is only for the stream. I'm only going to risk an amount that I'm not, you know, not gonna cry over if I lose it. So I'm going to place one whole lot. Stop loss 1867. Take profit. It's open, but I would definitely take one at 1855, 1850, 1845. So every $5 I would take one. 1865. Yes. 1867 is the stop loss. Why does it say it's do you agree or do you not agree?
I personally would prefer to stay out. For those that got into the sell positions in the morning, pretty sure you made enough today. Your daily, your weekly, whatever it is. I would just stay away from the markets and wait until tomorrow's news. My opinion, anyways.
And I 100% agree with you. But unfortunately, we have to show something to YouTube because, you know, that's how it works. So I put a small sell. We already made profit earlier this morning. So these were the, this was the first one. There was a minus 500 and I closed down 7.5 lots, and the rest I was just closing down. So you can see the timestamp during the close time. So just before 2 o'clock I was closing down every single position, and now we entered into another sell. So the max loss I'm allowing from this position 200. Let's make it 315 pounds, and that's it. But as I always say in the past few days, our prime day is going to be tomorrow and Friday, because If I click on this week in the economic calendar, you see that we have loads of rubbish on Monday and Tuesday. Today's Tuesday, so we have more rubbish. On Wednesday, we have the FOMC press conference prior or followed after the Fed interest rate decision. And, you know, the Fed is going to smash the market with 0.5 percentage point. Huge news. Very big. But we also had the... sorry, that's New Zealand. So this is the prime day. And also on Thursday, we have NFP. Now, it's very interesting what's happening with the US economy, because the US economy just printed a negative 1.4 growth number. So the GDP last week was minus 1.4%. So the economy in the US is not growing, it's not stagnating, it's shrinking, it's contracting. Now, I understand that one data printing isn't enough to make, you know, such a conclusion, because, you know, it could be for many reasons. Definitely not statistical or mathematical error, because these numbers are accurate, but you know, it's definitely shrinking and contracting. What else I wanted to say about today? I think that's it. So today is very risky. If you stay away from the market, as my colleague Andrew said, it's a wise decision. If you haven't made already today, most likely you're not going to make in the afternoon, and that's a fact, because as we progress into the day, we're going to see more volatility, and the kind of volatility that difficult to predict. And yeah, any thoughts?
I have a question, Thomas.
Go on.
It's an economic question.
Oh,
So-
we like economics, don't we?
Yeah.
Good.
How big impact got the European data on the gold price? I mean, does it have a significant impact?
Okay, so we're looking into causality. So you mentioned the gold price, and what was the causation? The European
Data printing.
is there any particular data print?
No, I mean all of them in general.
I don't think there would be much impact, in my opinion, but I haven't put much analysis and research into this. But in my personal experience, what really moves the market is definitely the US, because that's where the big money is, and most of the traders are investing in US denominated assets. So you know, the variables which have an effect on gold is monetary policy, which we're going to have tomorrow. So the Fed interest rate decision is a monetary policy news, because they're altering the money supply. So monetary policy, such as the Fed interest rate decision. Labor market data, but still the US, such as NFP. Where are you? Non-farm payrolls. DXY in normal market condition, dollar strength does make a difference, but during this time when markets are volatile and we have war and etc., DXY doesn't really have much effect. So it's a minor, negligible. And then we have you know, oil embargo, that fundamental news, which can't really be measured, but it's going to have an effect. Geopolitical news in Europe, yes, it has. But data printing in terms of, for example, CPI and all of that, I haven't noticed anything particularly. Mostly the geopolitical, but from the economic calendar, no.
Okay. Thank you.
Maybe there is. If anyone can tell me one, we can look into it. But in my personal experience, there isn't. There isn't any. I have a question as well. Bilal, maybe you can help me. Bilal. 275 minus 100. How much is that?
216, 650. How much did you say?
So 275 minus 100. It's 175.
55.
Yeah. That is the number of people who are watching the stream and forgot to press the like button. So ladies and gentlemen, if you're watching the stream, if you get any value, and if you respect my colleague Bilal here, who just asked a very smart question, keep pressing that like button. I want to see 300 likes today. And then we can talk.
I'm gonna like you know.
Merci beaucoup.
De rien.
Ah, parlez-vous français? Marwan?
A quick question on USD CAD. I think it's exciting setup. In the 15 minutes, it did the retracement upward to the 61.70 zone, and then it went back down again. What do you think?
I would not attempt to trade the USD CAD before interest rate decision. That's could react the same way as gold reacted prior to the interest rate decision. So the last rate hike was, when was it?
Weeks ago?
Yeah, 16th of March. Let's see how did it react. So 16th of March. Somewhere around here, US dollar.
Yeah.
Somewhere around this level. If you go down to the 2 hour. Oh, where is it gone? Cheeky fucker. Okay. Go down to the 1 hour time frame. That's interesting. So that was the, yeah, that was the rate hike around 7 o'clock. You see the prior day it was falling hard, and then on the day, no, actually the day before it was rising. So USD CAD, it's a bit difficult to tell, but then definitely as the rate hike went ahead, because the interest rate is higher in the US, obviously, the USD got definitely some strength, so it was rallying. And today, what we see,
just my thoughts on it. You have the embargo on oil. This is first. Second, if the rate value was not as expected, that will push the Canadian against the US, right? So if we have these two factors confirmed, then for sure it's gonna go down.
one of them was a rate hike surprise.
Yeah, if the rate hike was not as expected, less than what is expected, and the second thing is because of the oil embargo.
Yeah, the first one, in my opinion, first of all, thank you so much for the input. On the first one, I doubt that they're going to change the outcome of the interest rate decision. One of the reasons is because they were really loud about that they're going to raise 50 basis points, so they have to go ahead, otherwise they're going to lose trust if they change their mind on the day after this so much announcement that they're going to increase interest rates. So I think it's too late now to back up, so they have to. The second one is the oil embargo. Yeah, definitely, I agree with that. Question is, when would that go ahead? If we have any date, or when is the vote? Oh, we got into the news again because our famous Viktor Orban is going to veto the embargo. So I need to look up what's happening with the oil embargo and when is the vote about gonna go ahead, but that's definitely going to cause some issues. For gold, it's 100% bullish, 100% bullish. The last time, back in the 1970s, if you look up what happened, high inflation, slow growth, oil embargo, it was the perfect setup for gold to rally. How is our position going? Oh, we are in profit. Quite modest, but we are in profit. Who's in a profit? Who's selling? Who's buying?
I'm actually selling.
Yes.
Selling small, small, really small.
Tiny, Chintan. Oh,
Selling
Pin.
too.
Who's that?
Yes, me too. Me too.
Chintan. Who was that?
I want to sell but late already.
I want to buy and sell at the same time. Is it possible?
You know, I want to sell first. The confirmation first. I see it's a retest. It's a break and retest. Retest at the 1865, 64. Yeah, it's retest.
Oh! I have my withdrawal came through. Yeah. Yes, yes, yes. Why is it messed up? There you go. Yay! Happy days. Money is on the house. Where is it? You can't. Why is it messed up, my screen?
Yes.
Yay! 4XC is bloody quick with the withdrawals. I love them.
How much
And we
did it
already in
take
profit.
you, Thomas? Was it
Sorry?
just a day? Did you get the withdrawals just in a day?
Sorry?
Did you get the withdrawals in the same day?
Usually they do process the withdrawals for me within 15 minutes.
Wow. Which one is this?
4XC. So you know that we have one of the sales guys at in our team. So luckily I got to message him, and I say, Andre, can you just ask back office to process the withdrawal? And they do literally in 5-15 minutes if they're not busy.
Wow. Okay.
I need this.
The transfer is a little bit, you know, it takes time, especially when you're sending money to an offshore account, etc. But within 24 hours, usually it's done. So it's good company, definitely. Highly recommend, because the problem was when I was at the IC markets, sometimes the withdrawal, if I did the bank transfer, because I don't use PayPal, the bank transfer could take 5 to 7 business days, which is ridiculous. And the problem, the approval sometimes took 3 days. And you know, when the money is on the account and you want to take it out, you don't want to trade, but you end up trading and you're losing the amount that you wanted to withdraw, and then they cancel the withdrawal. It's just not good.
Thomas, that's what I'm going through at the moment.
Of losing your money?
No, with IC Markets. So I think I made the withdrawal on Thursday. I only received it today because it was a bank holiday yesterday.
Yeah, but it's just too slow, IC Markets, in my opinion.
It's very slow. If you don't use PayPal, it's not worth it.
Yeah, I ditched PayPal because
yeah, it's very slow.
It's
PayPal
you know,
is okay.
Yeah, but PayPal is rubbish because you know, once I had my account frozen for 3 months, and that's when I decided I'm not ever gonna use PayPal, because if you have large sums of money going in and out of the account, and when you're trading, you know, if you get to a point when you withdrawing minimum 10k or 5k, even that could flag red alerts on the account, and I got stuck 75k on my PayPal account for 3 months. And literally that was all my money. That's years ago. And then I decided there's no ever going to use PayPal again. And I couldn't do anything. I had to prove that, you know, that's my money. But the... Yeah?
What's the broker that you use? Sorry, Thomas.
4XC.
How do you spell that?
Let me give you a link.
Yep, sure. With me, I had this PayPal account And when I got the money back in PayPal, they said it's going to take anywhere between 4 to 15 days. That was bad, because I really don't know why it is taking so much time. So I did an initial testing of $100 just to see how much time it will take. And then it took, I think, 1 day. But when I made a transfer of like 12,000, it literally took 12 days to get the same amount. So
yeah,
there's no logic
bad.
to it.
When you know what's pissing me off? When you deposit large sums of money with a broker and you don't have access to your own money when you want to access and just withdraw, how on earth they come to rejecting and you know, they want you to trade that money which you withdraw, and it's tempting because, you know, it's tempting to trade that money which is still on your account, but chances are big that you're going to lose it, and that's a dirty move from the brokers.
And the worst thing is, my bank, it's an Emirates bank, so they refused the transaction. So that added more insult to the injury. And it took some more days. Then after that, then I gave another bank details, and it took another 15 days. So it took almost a 1 month time for me to get that, and I am not happy with that, the way ICM and PayPal is working.
No, PayPal is the worst. When you wanted to access your own money, imagine waiting 12 days, especially some people, you know, if you trade professionally, even pro traders, they live month to month because the amount of money they make, that's going to cover the living expenses, the clothes, the restaurants and everything. And back in the days, I was literally withdrawing just the amount of money I needed, so 3-4K. But, you know, 1-2 weeks when I had to pay rent, I had to fill up the car and everything, and I didn't have money on me because it was a trading account, and every profit basically was paying for my expenses, and I had to wait 1 or 2 weeks with IC markets. I said no. It's ridiculous.
It's difficult. It's difficult because when we're depending on solely on one particular income source, and that get delayed, it makes things miserable. But the only thing which I liked with these guys with ICM is when I transfer it back to my credit card, it's instantly, and when I take the amount from my credit card to increase my margin amount, it's instantly. It's just lightning fast. I mean, I click on OK button, and then the amount I see here in ICM in the margin. So that's fast. I don't know if that happens with all other brokers, but that one thing is good. But withdrawal takes, I mean, ages.
Yeah, it's much quicker when a broker takes your money than paying out your money. That's a fact, and I guarantee that 90% of brokers work like that. However, in IC markets, we have the privilege that my good friend Andrei, maybe he is on the Zoom. Let's check. Andrei, if you're listening to this, step forward. So it's a good thing that I just message him on WhatsApp that, hey, can you just hurry up on Nudge back office to send me my money? And literally within minutes, they approved the withdrawal.
Cool. That's good.
You can do that too, by the way.
Is this your own account, or is this like funded account?
No, that's my own account.
Own account? Congrats. That's good.
Because the broker is ForexC, so it's not a funded account. A funded account would be, I don't know what's the MyForex fund, what broker they use, but ForexC is its own account.
Okay. Then the broker is good. So this broker works for UAE region also, or is it like restricted to Europe?
No, actually they work, it's an offshore broker, but even the UK brokers are now offshore considered, but they are regulated, they are good, and it works. I know they have huge clientele in Brazil and Asia, but I think it works all around the world, India as well.
Yeah, because in ICM works, I'm sure even these guys should work. The only problem is the local regulations are a bit tighten up in UAE. They do a lot of checks when the amount is coming back to local banks. So with Emirates NBD Bank, which I'm using, the transaction got declined once. So I think it works with other bank, strangely. So let me try this broker. Let me see if they are okay with UAE region.
Yeah, Andrei is in our group. He's a sales or business development manager, something high up. So you can ask questions.
Sure. Are you happy with the spreads and commission, Thomas, if I may ask that question?
It's same as any other broker. You know, if you notice, the spread isn't going to be the problem of a trader, and everyone is quoting and citing like, oh, because of the spread I don't make money. No, that's bullshit. A good trader can make money even a wide spread as well. It's going to be less profit, but you know, the thing is that these days the brokers cannot really compete on spread because spreads are already razor sharp. The things that they can complete is flexibility, customer service, you know, quick withdrawals, you know, giving access, allowing you to use algorithms, many things, because these are ECN brokers. They can't really compete on spreads. The spread is already given to them.
Okay, that's good. That's good. So the one thing which I liked about this present one is, and again, that's one strong reason why I'm with this account, is they allow you to keep your trades for as long as you want without charging you the overnight charges, something like that they charge, right? If I keep
The swap.
for 1 day or swap, yeah, exactly. So that's not there with this account. I mean, it's a Sharia account, or like the Islamic kind of account, wherein you're not going to charge for keeping for a weekend and for any more days. You can keep it. No charges as such.
Yeah, I would be careful with that because you know, the first thing, the most important you want to check is whether a broker is A book or B book, whether your orders are actually hitting the market. And that's when you know that you're cheating if your order doesn't hit the market. A good broker is only an intermediary between the ECN and you. And I have a question from Rahul Ganotra. Tomasz, anyone in group who is from India using Forex and tried withdrawal to receive money in an Indian bank account? I know that we have 4 or 5 Indian guys and one lady who using Forex in India, but I don't know whether they're withdrawing to bank account or Skrill or PayPal, but I know they withdrawing money, and Indians can use as well. They're accepting Indian clients. And we are in profit, ladies and gentlemen. Where is my 35 pips? It's only 20 minutes into the stream and we are in profit. How cool is that?
Mas, can you explain me why you buy GBP USD at that area? What is the confirmation that you buy?
That was days ago, my friend. Why did I buy GBP USD at that time? One of the reasons is because dollar strength is coming to an end. So that was the entry. But don't ask why. I already forgot. That was the original. I don't remember. We have an event, and yeah, actually that was the day when the US GDP was announced, and because it was so crap, I told everyone that USD is going to weaken, and buy GDP, buy Euro USD, buy gold, and I'm still sitting in that one position since 28th of April. That was the reason. It's pure economics. Nice.
Thomas, how about US 30?
What about it?
I think it's making an inverted head and shoulder on 1 hour time frame.
It's very much possible, but US 30 is moving sideways in my opinion. So that could be Let me switch to trading view. I do agree with the inverted head and shoulder, but we still it's a bit risky in my opinion, but it will line up with, you know, gold is short and US 30 is long. It would come up to retest, you know, that resistance level and fall, because when rates are rising, stocks are falling, and that would line up. How you see how nice is this price action? Broke the resistance with an impulse move, and since that we are making lower highs and lower lows. So now a lower high is coming. So yeah, I agree with that. Maybe we should put some money on it. Are you in long?
Yes, Thomas?
Yes, no, yes. Yeah, you can go long.
I'm in long. Yes.
Yeah, why not? Looks good, I agree with that. And take profit would back to where the entry was, the first position. So maybe delete this because this is confusing. And yeah, This is what it would look like in the coming days. So price from here would go up and then down. There you go. Happy days.
Thank you for the analysis.
You are very welcome, brother.
Can you check me the Nasdaq?
Oh my god, what is happening? Check this, check that. There you go. There's your Nasdaq. Nasdaq is going to drop back to 100k. Yeah, let's make it 100k. It's gonna go down. I'm telling you, it's gonna drop to 100k. I don't know who laughed, but I wanna bet with you that it's gonna drop to 100k. Because, have a look. Everything points to the direction that stock market is going to fall. I mean, oil prices are gonna go up like crazy. Volatility is coming back on stock market. Look at this, worst month for Wall Street tech stocks since 2008. And we're talking about this month, the last April. Stocks are going down. When rates are increasing, interest rates are going up. That means that short and long-term liabilities of the stock companies are going to increase. The loans they have to repay. If inflation is increasing, the inputs that goes into production for goods and services are going to be more expensive, meaning that the profitability is going to be less. So I already gave you 2 reasons. If it's not enough, I'll give you a third one. If the inflation is going up, these companies have to pay higher wages for the employees, meaning that minimum 8 to 12% increase on wages. Huge pressure. Imagine that if you have a company and you just suddenly have to raise wages by 10% out of your profit, which you haven't earned. A fourth reason is inflation is going up, which is going to squeeze the disposable income of the households, meaning that they can't spend more money. They have less money to spend. And these companies, Apple, Amazon, Microsoft, they producing stuff, goods and services to people. And majority of the people, majority of their consumers out the households, especially in the US, the GDP in the US, 60% of GDP comes from consumption. Think about that. If there is no consumption, there's no purchasing and buying, households are not consuming, stocks are going down. And that's what I'm saying. Nasdaq is gonna hit 100k. Not today, not tomorrow, but one day. And gold is back to our entry point.
Yeah, as you say, very volatile. I've already taken my profits, so I'm not worried about it.
Yeah, I'm gonna leave this one.
I just basically scalped a little bit and then.
Yeah, I'm gonna leave this one for fun, just for the stream. And let's see what questions we have. So Winner is asking, hi Tamash, is your withdrawal a month profit or several months? Maybe this, maybe that. So let's not talk about personal finances on the stream. Most important, and what you should consider focusing on, is percentage, pips. That's going to take you further in your career than asking about, was my withdrawal a month profit or several months? That has nothing to do with your performance, so it's irrelevant. Gold is going up. Let's see. Gold is really volatile today. Chef OP asking on YouTube, for beginners, how much should you invest? It depends. What do you want to invest in? I would invest in books. I would invest in your time and in yourself. So learn on demo first. What I would recommend for beginners to learn risk management from day one. The best thing to do so if you sign up to a prop firm challenge, such as my Forex fund. You know, for $80–90 you can sign up, and you have the opportunity to get, you know, funded from $10,000 to $200,000 accounts. $84, you know, it's not a big investment, but it's going to definitely teach you patience, risk management, and respecting your money, and, you know, obeying the rules, having a trading plan, because they give you a trading plan, what rules not to break, overall drawdown, minimum trading days, maximum trading days, etc. And if you win, you do the challenge, you get your money back. So that's what I would invest in, and not uploading money to your account if you're a beginner. See. Let's see if the previous daily close is holding up. Ooh, Rahul Ganotra is very loud about 1875. It's coming soon. It's possible. Anything is possible. If you make your analysis, stick to it. If it hits your TP, I'm more than happy. If it hits my stop loss, I only risk what I afford to lose.
Thomas, do you happen to see Isaac's analysis on the gold strike price options at the
Isaac?
Isaac's. He's posted it in the Discord like a couple days ago.
On the strike price?
Yeah.
No, I've seen Kim. I've seen Kim was posting about the option. Yeah, Isaac. Yeah, Isaac doesn't post about. Or I haven't seen.
That's Ken. Yeah, that's Ken that posted the option prices.
Yeah, we discussed about that, you know, options, which Christine has more experience with options. I only managed risk for options, so I was making company policies about how not to get delivered a ton of coffee to the bank if someone screws up the maturity date and forgets to roll over the contract. That was actually futures, not options. But long story short, the options market and the futures market, we don't know how many is speculative contracts. So it's difficult to pinpoint. Can give you some directions about the key levels, but how much is long because of speculation and just hedging. And also remember that the gold mines and everyone who's holding gold physical inventory, they usually go against the inventory as a hedging. So if they hold physical gold inventory, they go short on the inventory, because if somebody wants to buy, then they can just buy it back cheaper on the market, and you know, they make profit even on the sell. But Christine can confirm and maybe explain some more details about using options, expiry dates, etc. on gold.
I mean, like looking at the charts that he posted the other day, there are a lot of interest at the strike at 1850 and 1840. So, but then you have to look at the contracts. Like whatever it was posted on the CME website, they're basically posting the next month's expiry. So it's in May, but if you look at the contract, they are mostly for June. So you can kind of gauge the market sentiment as of where the interests are. So there were contracts that were executed around, people were buying calls there were calls executed at 1840. So you can see like market right now is, I think yesterday was trading around the 60s, 70s area. So if their interest is at 1840, it means there are people wanting to buy. They want to get closer strike to buy. So you can tell that there are interest to buy, but that's for next month. But if you look at the comparison of the contracts, they're very close. Like you can see, let's say at 1850, right? That's what Timeless is showing. Then you have calls as 12.02, and then you have puts as 11.227. Regardless, right? The differences between them is very small. So let's say if they are buying calls and then selling puts, right? If they're really buying it, then if you net, then the differences is not that big. I mean, especially when if they do cash settle, they're not even doing physical delivery. Then the difference is very small. But you can see there's a lot of interest for the strike at 1850.
Yeah.
So let's say the other one, right, at 1950, right? You can see there are calls, right? I mean, my assumptions will be people are selling calls and then buying puts, because that's more attractive strike for people to be selling gold. But there is a strategy. So there are structured strategies where you can sell calls and then buy puts, and then you can, because buying like in the money is very expensive. You have to sell maybe multiple times of calls in order for you to fund a zero cost or maybe a lower premium buy for the puts. So that's why you see there are more interest and more contracts on the calls. There's like 6,000, but then for the puts there's about like 2,700. So my assumption, my best guess would be people are selling multiple calls in order to fund the puts that they are buying, because it's so in the money right now.
Yeah, I do agree with that, and also don't forget the speculative aspect of the options market. Some people are just collecting ridiculous premiums by, calling and quoting prices which are extremes. It happened in the past.
Exactly.
The bank I used to work for, two guys were giving price quotations, making contracts for Euro, Norwegian crown, Euro NOK, and they were collecting premiums, and the prices or the puts and the calls were just ridiculous, that no one ever thought that it could possibly hit those levels. But when the shit hits the fans and the market crashed, they were in deep trouble. So there is a speculative asset as well.
Yeah, especially when you do long dated options, like all you need to do is put like a knockout, or let's say you do a 6 months. Well, cross currencies options are, the premium is more attractive than gold. But if you do that and then like you do like a 6 months and then you put a knockout or a knock in, then pretty much like not much of a knock in, but you knock out, then sometimes you can have like, if let's say for Australian dollar, they were you're betting on an interest rate hike today, then what you need to do, you can do is like selling a put with like a knockout on top.
Have you
then
read this book?
Yes.
You read it?
Yes.
How sick you are.
I have a lot of books with like about the Greeks. I actually bought a book where it's completely based on like hedging on the Greeks. Yeah,
it's not for me. I tried. I even applied once for it wasn't an options trading job. It was a back office job, middle office job, and I failed miserably. It's not for me, options trading. However, it's a funny thing. I never traded option. Well, I had the knowledge, and I was asked to do capital market risk management for the guys who trade options. I was like, really? That's a great thing. So I went to the desk. I was like, hey guys, I'm going to risk manage you from now on. So we sat down, and they were really helpful, and we made the company policy about the options desk, what things to do, what not to do, set up the limits for market risk. But options, it's for smarter people like Christine, and also we have Andrew Parcero in the group. I know he was working for Bank of America or Merrill Lynch maybe on the options desk. Anyway, so options is for smart people like Christine.
Option is fun once you get used to it. Plus, I feel like, I mean, for me, it's more like about spot trading and an option as like a strategies together. Then sometimes you just need to manage the proportions of maybe more options or maybe more spot trading or something like that. It balances out the portfolio. And then, like, I mean, sometimes when you're uncertain about where the market is going, then you can kind of like, okay, let me just do some options, and then if it's like more like a event driven thing, then yeah, I mean, the other day gold pushed up to like 2070, then yeah, you can sell a lot of calls on the top and then just sit there and wait for maturity and then just basically just wait, like take the premium, or just yeah, I did a lot, like 6 months, and then put a knockout, and then basically got knocked out in like, I mean, the option haven't even started, and then your option is already knocked out, and then your premium is in 2 days.
I do agree, but still, I don't have much experience in options. I tried, but that was just a next level, which I could never. I don't know. Anyway, enough of
Spot
options.
trading is more exciting. Like you can day trade, you get in, you get out.
I like
You
the
don't need to worry
strategy
about it.
part. And what we do recently is, having a trading plan, talking about monetary policy, talking about macroeconomics, thinking about, okay, so which country is going to be the loser, which currency is going to be the winner, what are the possible scenarios, and allocating risk according to, the possibilities, and, measuring them by risk weights. And, putting your money in different bets. It's like, going to the, what is it called, to William Hill to place some bets on your favorite football team, and someone else on, horse racing. Same thing.
Yeah, sometimes the macro, actually the economic part actually helps you to decide whether you want to hold a trade in terms of swing or something like that. Because of course we do trades on a daily basis, but there are certain times, like the other day, you put on the pan trade because of the GDP, the US GDP was so bad, and then like you make a decision of like getting a trade, it moves a lot, and then you can just sit on it because you do have a more of a macro view of how things are going to move. Then sometimes I do like using TA and FA together. So sometimes it helps you to look at the bigger picture as if like, okay, if I get in what is the macro is thinking, then it does help.
And when you do the macro analysis and the full strategy, you can say, well, on one hand, this could play out, on the other hand, maybe not, and you covered.
Yeah, exactly.
Okay, so see, and Samuel was asking about the JOLTS job openings 5 times in the YouTube chat while we were chatting about options contracts. So what would you like to know about the JOLTS job openings? It has a description. So it's just a survey done by the US Bureau of Labor Statistics to help to measure job vacancies. It collects data from employers about their businesses, employment, job openings, recruitment, hires and separations. So it's definitely a good indicator about the health of the US economy, and it tells you that, okay, how many, so we have more job openings than the forecast, but it's still less than the previous, which was 11.2 million. The problem with the JOLTS job openings, there is a lot of revision goes into this. So they always, or most likely they revise the data that comes out. And let's see what's happening. So we had the slump back in 2020. And after that, when the COVID started crystallizing that, okay, what are we facing with? Then companies started to fiddle around with jobs. So these jobs, back to the pre-pandemic levels, were actually no new jobs. These were the old jobs taken back. And maybe I would go to the extreme that even above, back in 2021, end of year, these were just temporary jobs for the seasonal run-up. Amazon hired a lot of people. Those were new jobs. And, it looks like that the job openings are at all-time high. And the other reason for this is because if you look at the labor market participation data, people don't want to take up the jobs. So we have more job openings, but those jobs are not taken up because the labor market participation rate, which is, I don't know when is it, but it's decade low. People don't want to take up shitty jobs in warehouses. Christine has a question from Gold is Money. Gold is money, everything else. Christine, do you also sell puts to collect the premium?
Yes. I do a lot of puts, but mostly because I actually want the position. So most of the time, if I sell calls, right now I do a lot of puts with a lot of I basically do a lot of structure. So I'll be, let's say I'll be buying put and buying calls, gold calls, and then I will be selling puts, and then with knockouts. So for the calls, I actually want to get into the position, but for the puts, if I get in, get it. If I don't, then hey, I'm using it to fund my calls anyway. So but both of them I will have a knockout as well. Most of the time for those kind of structures, I usually do very long period of times. Let's say I would do 12 monthly structures in terms of a year. So everything is confirmed, let's say today, for a year. So every month on let's say for every month the same day, then I will get a fixing to see if I get to buy gold or not. If the structure get knocked out, then the whole thing get knocked out. So that's one of the reasons why I really looked into the macro of things, because this kind of stuff what I do is a year. So you can't just be like, okay, today this is where the gold price is and I'm going to get in. You don't do that. You actually look at the macro things too, and then you look at the strikes, you look at the prices, and then you see how attractive they are. Because when market is so volatile, buying options is very expensive. Selling options is a good time to sell options because of the volatility, but buying options is very expensive. So you need to have a balance of where the strike is, where the knockout is, and get a balance of both, and not get too expensive, or with a knockout that is too close to where you get knocked out, and then you get to buy 1 month, and then the whole thing get knocked out. But with cross currencies, I do like to sell options to get premium.
Absolutely. If volatility increases, I mean, you have to buy the options before the shit hits the fan, because options is kind of hedging. So in my opinion, as you just confirmed that, smart people, they do prepare for the worst possible scenario. So buying options ahead before the shit hits the fans and execute. For example, if you have a corn producer in the US, big farmer, loads of acres, have corn, and it's speculating that, okay, so maybe the price of corn next year is going to drop because there will be some excess supply on the market. The weather is good, for many reasons there will be excess supply of corn on the market. So what he wants to do, lock in the current price in a year in advance. So what he has to do is, Christine.
What? I'll be buying. Let's say if I think the price is going to drop, then I'll be buying put and sell calls.
Yeah.
So if the price
locking in the
right,
price.
Yeah. So let's say right now let's say the exercise price is going to be, let's say $200, and I think the price after gradually is going to drop to maybe 180, 150, or down to 100. So what I'm doing is I'm doing 1 year structure where the strike is going to be at $200. So maybe I will have a knockout. So as long as the price keeps going, then I'll be selling at $200. So it doesn't matter. At least I know that within a year everything is going to be like that. But let's say that is a knockout maybe at $90. So as long as price stays between $90 and $200, then I'll be fine. Once it touches 90, then the whole structure gets knocked out. I will still be suffering, but at least I will get a few months covered.
Absolutely. So imagine that the options contract, like a McDonald's voucher, you have the right but not the obligation to go in and redeem your call option for a Big Mac at half price. Same thing, just simplified version. And Zaib Music is asking, someone help me out from hedge. Okay, so I think it's a perfect example why we're not hedging on the spot market. And I think it's some strategies out there from many years ago. Some people do hedge on the spot market, but with spot contracts. And you know, professionals, they don't do this because that's just suicide. Try to get one direction first right, correctly, and then think about it. Maybe you put a counter trade, but you know, hedging is not for days on the spot market, and I wouldn't recommend to anyone to hedge. Christine, do you hedge on the spot market?
No, I
with
don't.
spot contracts? They're just crazy.
All my hedging will be done in terms of options.
Derivatives.
Yes.
Yeah, that's
You
that's
can do
what
swaps.
Professionals do. Yeah. Credit
you
default
can do
swap,
swap.
you can do swap.
Exactly.
Plain vanilla forward contract, future. You can hedge on the futures market if you're a fixed income trader. But
and if you're
hedging.
Sorry, go ahead.
No, just I'm always shocked at how many people are, you know, they trade on CFDs, trade gold. They get the direction right, that gold is going up, so they're sitting in a long, and they start shorting it, i.e. hedging. No, that's not hedging. That is just a stupid thing to do. In my opinion, no one should do it on the spot market.
I mean, spot market is more for you to just get into a position right away to have an exposure. But if you're really hedging, you need to be using derivatives because you just want to have the right and not really have the obligation. So let's say if your view is right, then you can hold on to your spot position and then just let the option expire, or maybe let's say the market will move that way, then if someone exercises the option, then yeah, fine, whatever, you still got to take profits. So it really, for hedging, is not so much for you to, I mean, there are speculations, but if you want to hedge, most of the time you open positions in the spot market and then you hedge with options and other stuff. Like there is, even if you're sophisticated enough, you can even do swaptions, and you can even write options on bonds. You can do those. Those are more complicated things, but
and then you can bring in the synthetics and
exactly
endless opportunities. But in the meantime, I'm really thinking to close down this one standard lot, even though I know it's a small loss, but I just hate to be in loss. So I don't know what to do. 180 quid, that's a lot of money. It's, you know, it's a waste.
I mean, just close it. I'm in long, so that's why I'm just.
I don't want to go against Christine. But the setup is still valid. You know, I left wide enough stop loss for price to wiggle. But you know, today it's just a crap day. It was a good day in the morning. Shame we don't do morning YouTube streams, but London session is not as popular as the New York, because our friends from overseas, they like the afternoon trading. So we made money today. Afternoon, I'm not planning to make or lose more money. It's more than enough what we made in the morning. But what should we do then? We only an hour into the stream. Any suggestions? Maybe what I should do, because I didn't realize that I still have the, oops, don't look at my browsing history, that's not YouTube friendly. I should end the sales. There's only a few membership left, so today I'm gonna end the sales. If you wanna take advantage of the 50% discount, go to alphafx.eu, select the plan and enjoy the discount. In the meantime, I'm just gonna have a quick last look about the markets to see if we have any opportunity. But the problem is we have something tomorrow which is called the Fed interest rate decision. Everyone is waiting for this, so not recommended to trade in the afternoon if you're not in a position already. Volatility is coming, and I think Miss Lagarde, just started her speech today. Where are you, Christine?
Should have just started it because it was 2 o'clock.
Yeah, so Miss Lagarde is speaking 5 minutes in. I guarantee we're going to have some volatility. If they mention the oil embargo or anything related to the Ukrainian war, market's gonna go crazy. Yeah, the market was waiting for Miss Lagarde's speech. As you can see, this massive bullish spike. That is the Lagarde effect. Christine Lagarde. So I won't place any other positions in this afternoon session because we have the prime day tomorrow and on Friday. So just to give you an accurate representation about my current positions, that is now out of the game. Quiz Pereira asking, keep talking stock market. Yeah, I could do it for hours. I love it, but I haven't traded stocks for a long time. But I like the economics behind and what drives, the markets. Give me some ideas, guys. What should we do in the stream? I mean, ideally, I just want to go out to have some burritos and a beer and walk. But, it's too early.
Thomas, you previously mentioned about the economics class or something.
I did mention, and I was really hoping that no one's going to bring it up this week.
You asked for it.
Yeah. Yeah, so what's going to happen, it's probably next week, because this week I'm super busy tomorrow.
Yeah, don't worry.
But I already started thinking about, and as a proof to show you that I have this book here, and with the markers and everything, so I already started selecting the topics which we're going to learn about from next week. Economics. We're going to start with supply and demand. I'm going to teach you about the currency market, who are the big players, what is an ECN, how are the orders executed, what is the best execution, what is MiFID, we're going to talk about economics, supply, demand, everything that I was taught at university and CFA and CSI and at work. Just I need some time to put together these slides, and also it's a bit tough to talk about economics in a professional way, but I will do my best.
All right, awesome.
I think maybe next week Wednesday, but let's see.
Yeah, sure.
This week is not. Tomorrow I'm moving a lot of stuff, so I'm gonna have 3 hours drive before the afternoon stream, or actually tomorrow the stream maybe is going to start later because we have the interest rate decision in the evening.
Yeah.
So maybe we're going to start the stream later.
Probably a good idea, actually.
Yeah.
Gotta be 2 a.m. in my time.
Same. I'll probably be asleep by then.
No, most of the time is I'll go to sleep and then I'll set the alarm at 1:55 and then I'll get up and sit through the whole thing, and hopefully they don't have the press conference, but if they do, I will have to sit till like it finish, which is normally about like 5:30 my time, and I pretty much end up staying up for the whole day.
Just have lots of coffee, right?
Yeah, because after it's done, when I started the day, I need to have a conference call and talk about what's going on, what was being like talked about, and then I need to look at where the prices are, and then we need to have a discussion. So, but if it's 5:30, and then I'll just go for a workout and then get ready for the day.
Right, that's cool.
Yeah, that's about that one day of the
I'll
month.
probably be in camp.
I'm not too fond of that day.
Yeah.
But I'm actually really looking forward to the press conference for this one though, because like it's fine if they still hike 50 basis point, but given the GDP, I'm really looking forward to how they're going to explain the future plan of the hikes.
I would be really interested as well to understand how they're going to change the communication after that ridiculous negative 1.4 GDP growth outlook. The Fed is just way behind. If you look at I showed this already to many of you, but if you look at the latest research about IMF, they keep changing the growth outlook for 2022 and 23. There is a slowdown coming. If you look at the projections, the global GDP, so it's an aggregate cumulative, it's going to halve. United States going to halve, even more than half. Euro area from 5.3 to 2.3. So, economies are going to start shrinking, or if not shrinking, then stagnating. High inflation, slow growth, i.e. stagflation. The US is no different. Consumption is going to reduce. Netflix was the first best indicator, which you can use these indicators. Netflix number of subscription fallen back because people are giving up the luxury goods. Netflix subscription service is a luxury good. There is a massive, huge squeeze, very strong squeeze on household disposable income. So, if households are not spending, in the US, 60% of GDP is made up of household consumption, so it's pretty big. So 50 or 60%. So in this economic climate, the Fed doesn't have the option to start aggressively raising interest rate. It's impossible.
Yeah, and Yellen actually, she talked about last time, she was saying the Fed will try to give the US economy a soft landing. So I don't know how it's going to plan a soft landing with like a 0.5 hike and then.
No, okay, so soft landing, it's an economic terminology, and I really started to picking up on soft landing because I saw in many articles recently, and also the Fed stated that they are on the road to a soft landing. I was like, no, mate. If you look what is soft landing, soft landing definition, Investopedia says that soft landing is in economics a cyclical slowdown in economic growth that avoids recession. Now, a soft landing, by terminology, a soft landing is the goal of a central bank when it seeks to raise interest rate just enough to stop an economy from overheating and experiencing high inflation without causing severe downturn. Now, the problem is that they were delayed because we have high inflation. Soft landing may also refer to gradual, relatively painless slowdown in particular industrial and economic sector. What are we talking about? We are late with inflation. Industries didn't just slow down, they shut. Many of the industries all around the world, they completely shut and went bust during the pandemic and after the pandemic as well. It's too late for soft landing. So, rant over. The other thing is, Christian Lillebraten, high interest rate, most probably gold gonna go down, ? Care to elaborate? We do elaborate on this every single time, and I'll show you just one simple thing about what happened the last time, back in 2015, when the Fed started to raise interest rate. At the very moment when they started raising interest rate, gold was flying. At the very moment when the QE hit the market, so they started unwinding the balance sheet, which is made up most of mortgage-backed securities, and on the liability side, all the currency, US dollar, that's fluctuating in the economy. So anyway, they started shrinking the balance sheet, reducing the money supply, and gold started to fly. If we go back not too long ago, 16th of March, what happened on the last interest rate hike? 16th of March. Where are you, 16th of March? Maybe I go to the daily time frame. 16th of March. Yeah, it was this one right here. 16th of March, gold went up. So that was 500 pips. If I no, actually it's almost 700 pips. That was the effect of the rate hike. But in the meantime, we had conflicting economic data. We had the war in Ukraine, so price started to move sideways and then bounce back up again. And then we had the Chinese slowdown, which spooked investors, and they started selling off. You know, there's a huge demand in coins and jewelry in China, is a main driver of the gold market, and started to drop. So I think, in my opinion, you know, gold is going to go up tomorrow, but it's the future to confirm whether my analysis and my theory is valid. But if you have an analysis, if you have a theory, a strategy for tomorrow, I'm more than happy to look into it or listen to it. Make sure you have a strategy. That's the only way to survive in the financial markets. But for today, I think I'm going to call it a day, guys. Gold is going up. Without me, I don't have any open positions. So team, see you tomorrow at 8 a.m. We're going to do the morning briefing.
All right.
Okay, thank you, Thomas.
Bye.
Bye.
In the afternoon, tomorrow we're going to talk about when we start the stream. Okay, see you.
Wait, no, hey, Thomas.
Everyone just left while you're speaking.
And YouTube. So market is quite, I wouldn't say it's boring, but definitely there's a volatility on the market. We made enough profit for the afternoon. For now, price is just in a territory where I wouldn't be confident to say or put my money that actually it's a sell or a buy. It's not. We're waiting for tomorrow, which is the prime day. We're going to have the interest rate hike. We're going to have the press conference. So many things. And don't forget that on Friday we have the NFP, the most awaited data printing in the US economy. So thank you so much for joining in. If you can give me a massive favor and just one more time press the like button if you haven't already, that would help out the stream to pick up by the algorithm. And see you all tomorrow. Probably we're going to start the stream a little bit later because we have 5 hours. So it's going to be 7 o'clock for the interest rate and the FOMC discussion. I'm going to send a message in Telegram. So if you're not signed up to my Telegram, make sure you sign up because I will send out the link into the Telegram. Until then, see you. This is the Alpha FX.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special. To hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground. With a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.